Now, here's the host of Good as Gold, Nick Grovich.
Hi, this is Nick Grovich. Thanks for joining me today. How different the markets are right now compared to just a couple of months ago. The world economic outlook isn't looking so good. The stock market's been giving people whiplash, and it's making people take another look at both gold and silver. If you're thinking about gold and silver, by the way, we just finished a new brochure called Protect Your Wealth with Precious Metals. You can call the office at 480-553-5282. Ask them for a free copy of that. We'll be glad to send it out. Gold's hovering right around $1,100, silver right around $14. The question always is, when do they turn around? Have we seen the bottom? It's really hard to tell. It's right now, with the way the world equity markets are, a lot of people have been looking at gold and silver again, like I said. Last year it was kind of interesting. Everyone was waiting for $1,000 gold, and I heard that month after month after month. All the experts said $1,000 was the bottom. Everyone waited for it, and of course we never quite saw it. And you see that on the upside too. When gold was up around $1,900, everyone was waiting for $2,000. Or $2,000 an ounce gold. So, it just seems like whenever the experts predict a certain number, people wait for it, and on the downside, they never quite get there, and on the upside, people miss out on selling near or at the top because they're always waiting for that last $100. But when I understand the past year when people are making money somewhere else, they don't really want to jump into something they're not as sure about. But as soon as there's a little uncertainty, as we've really been seeing lately, you start seeing people start pulling the trigger and jumping back into their safe haven. Gold and silver are considered a safe haven, and some of the buying right now is because of that safe haven. But a lot of it's just because people are afraid. They just don't know what's going to happen. The thing is, nobody knows. Nobody really knows when the markets are correcting or when they're crashing. And, a year or two later, of course, you look back and you say, oh, of course, I should have done this or I should have done that. It's clear after it happens. So many times I look back and I say, oh, yeah, I should have known that was the time to sell, or that should have been the time to buy gold. And the problem is, when it's happening, you just don't know what's going to happen. And it's that uncertainty that really drives people towards the precious metals. So, it's I can't say we're ready to take off and go back to $1,900 or $2,000, but there certainly is a lot of buying going on right now. I know at our office, we've probably sold 10 times more gold this month than we sold a year ago at this time. So that's got to be a real positive factor in those markets right now. One thing I want to mention before I forget, we're having a seminar February 10th from 1 to 4 p.m. at the Doubletree Resort in Scottsdale. It's going to be a lot of new information. If you've been to one of our past seminars, we kind of cover a lot of the basics about the markets. This is going to be a little different. We're going to get into a lot more detail. We're going to evaluate a lot of the most commonly sold coins, coins sold by a variety of different dealers, and the reasons why they push those coins. We're going to go back, show you how they performed, kind of show you the pros and cons of different types of coins that are sold out there, both semi-numismatic and just the bullion coins. And hopefully that'll help you decide, number one, if you're in the market, what you should own, but number two is if you even should be in this market. So if you want to go to that seminar workshop, give the office a call. It's 480-553-5282, or you can sign up on the website, AmericanFederal.com. What's going on today, I read an article yesterday that kind of reminded me, and I was talking about it at the office. You remember back in the 90s, the mid-90s, everyone thought Asia was the up-and-coming spot. Everybody put their money in Asia. A lot of the big funds were investing in Thailand and the emerging Asian markets. And then in 1997, it all crashed. It all crashed and burned, and people couldn't get their money out of there fast enough. And it feels like that. I'm not saying that's what's going on in China right now, but it feels like that. There's a lot of money coming out of China. Like I said earlier, nobody knows, is this a bump in the road or is it a crash? You just don't know, but that's what it's feeling like. People forget 20 years ago how devastating that was for people. And some of the funds, some of the big fund managers went broke during that Asian contagion, as they call it. And what I was reading, the last 6 quarters, over $1 trillion has been pulled out of the equities markets in China. So there's definitely a lot of concern right now. And this could be something that starts moving the gold market. The fact that we're sitting right around $1,100, I think, is a really good sign. After being in the low $1,000 mark, there just seems to be an awful lot of buying. Now, one thing that's kind of interesting too, that usually doesn't happen when the markets are, or I should say, when people are buying a lot of physical metals. Usually, when we see a lot of buying, the premiums go up quite a bit. You might remember last summer when silver had first come down. The premium, that is the amount you pay over and above the spot price of gold or silver, but the premiums were really, really high. So when when silver was $14 an ounce, you were paying $22, $23 to actually buy it. And right now, the premiums on most of the gold coins are actually cheaper than they've been in a long time. So it doesn't save you a ton of money. I mean, on a 1 ounce coin, you might save $5 to $10 over what the normal price would be. So it's not a ton of money, but the fact that you can buy the gold or silver even right now at the lower premiums, it's kind of a nice little benefit. With the amount of buying going on, I would think just the opposite would be happening right now, but that's definitely a big benefit right now. So we're going to talk a little bit more about coins too as I go forward here. I was just at the Fun Show, if you're familiar with that. That's the one of the biggest shows of the year. It's down in Florida. That's why it's called the Fun Show, the Florida United Numismatics Show. And I took my wife with me. We thought we'd have a great time down in Florida. And, of course, before I got there, it was beautiful and 85 degrees. And once I showed up, it was 50 degrees and raining. And it was really kind of funny because you could see all the people from New York and New Jersey. They didn't want to give up on their vacation. It was pouring rain, 50 degrees, and they were all out in the ocean. And I sat on the balcony and just kind of laughed. And I thought, well, I guess when you plan a vacation, you're going to get every last ounce of ocean and beach that you can. But the show was really good. We're coming up on a break. I'll tell you a little bit more about it after this break. But it was, like I said, the Fun Show is the first major show of the year. It's usually pretty well attended. There were some huge auctions that went on for 5 days worth of auctions, and a lot of coins trade hands down there. So it kind of sets the stage for what's coming up here in the next couple months. And as soon as we get back from this break, I'll tell you some of the highlights of the show, tell you what happened there, and we can talk a little bit more about the metals market too. So we'll be right back in a minute.
Once again, here's Nick Grovich.
Nick Grovich, I'm back with you. I was talking a little bit about the Fun Show in Florida, the Florida United Numismatics Show. We're going to talk a little bit more about gold too here in a minute. It's, like I said, this is the first big show of the year. It's always a lot of fun. And of course, because it's in Florida, everyone wants to go to Florida. In the old days, they used to have some big shows in Las Vegas, and of course, every dealer in the country loved going to Las Vegas. They don't have those shows anymore, but those were always really well attended. But the problem with the Vegas shows, after the first day, everyone got caught up in the casinos, and nobody showed up at the shows anymore. So maybe that's one of the reasons they stopped the Las Vegas shows. Like I said, the weather was terrible, so nobody had a reason not to go to the show this year. It really seemed pretty quiet. It's funny because I read the write-ups in the coin magazines like Coin World and Numismatic News, and they always say, oh, the dealers beat their expectations. Well, I don't know too many dealers who had big expectations. So when you have really low expectations, I guess it's okay. I guess it's easy to beat them. But, I spent a couple days there. One of the things I wanted to do while I was there was really hit the auctions and see what auction prices were going like. One coin was kind of surprising. For those of you who know coins, it was an 1894 S Barber dime. Now, if you don't know that coin, that's one of the great American rarities. They only made 24 of those coins. And I think there's only 10 of them that are accounted for, so they only know where 10 of them are. And the story behind it is that at that time, the mint books, the books were at the mint, were off by $2.40. So rather than figure out where that $2.40 was, the director of the mint made 24 dimes to balance the books. So, and it's really crazy because a lot of the big rarities were created by the mint directors just making some oddball coin or making a coin that wasn't scheduled to be made. And those oftentimes end up being some of the rarest coins. Same thing with the 1913 nickel, which is a $4 million coin. The 1804 silver dollar, which they really didn't make till the 1830s. A lot of those, they have a little story. They're not really regularly issued coins, and they end up being the most rare coins. But before the show, I really thought that this dime, this 1894S, I was expecting to go for $2.5 to $3 million, and it went for just under $2 million, including the buyer's fee included in that. So it was to me, that was a little disappointing, because what's been happening the last few years is the really super rare coins and the really super collectible coins have been doing really well. And I noticed at this particular auction, and I'm not going to go through coin by coin, but a lot of the super rarities in the silver dollars, for example, there was one coin that just a couple of years ago sold for $773,000, went at auction for $500,000. So we're seeing a little bit of a kink in the action in some of these coins. And I think some of it is because some of them are going to investors who don't really know, or they're trying to build the finest known sets, and then they complete the finest known set, and then they go to sell them. And whoever's the second in line for the finest known doesn't want to pay as much as the guy who was first in line. And so some of these coins end up going for less money. So, a lot of coins did go for big money, but that was a coin that I felt was a little disappointing in the price. And I don't know if that's going to be a trend in the marketplace or not. Where we saw a lot of interest was in the early American coins, a lot of stuff from the early 1700s, early 1800s, and that's been a trend that's been going for quite a few years. In fact, one of my friends down there, he probably doesn't want me to tell you exactly what coin it was, but a buddy of mine bought a coin for over $350,000 for his daughter, and it was an MS-65 condition coin from the late 1700s. So I don't want to say exactly what coin it was, but it was a spectacular coin. But that's the kind of stuff that, if you're in that kind of ballpark, that's the kind of stuff you could buy and put away. I mean, that coin, in my opinion, you give that 5 or 10 years, it's going to be $1 million coin. And like I said, this was a dealer buddy of mine. He bought it, put it away for his daughter for college. So, that's the kind of stuff that really is worth buying, but there's not that many people that want to buy a $350,000 or $400,000 coin. Anything that was even slightly common seemed to be going for 5 or 10% less than what you would have expected. I did the auction one afternoon, and they were going through, a lot of $400 to $700 coins, and it seemed like I could have bought a lot of those and made $20 or $30 a coin, but you'd have to buy an awful lot of coins and make $20 a coin to make it worthwhile. So, some collectors got a really good deal on stuff. The big problem I see at some of these shows is the dealers show up and they put their inventory out, but then you have a 20 or 30 or $50 million auction, and it just sucks all the money up. So then there's no money left for the dealers on the floor. There's nobody buying all the coins, all the common coins or semi-common coins that are laying around on the floor. So you get an initial day, the first day, the dealers run around, they buy up anything that looks good. And then after that, the show kind of slows down until Friday rolls around, and half the guys go home. And then the public comes in Saturday and Sunday, and there's nothing but leftovers for them to buy. So, and that's been kind of a trend with the shows. That's why the shows, they really seem to be dying off. They're nothing like they were 20 years ago. 20 years ago, you could hardly walk down the aisle at a coin show. Now it's not quite like a morgue, but it's pretty quiet. It's pretty darn quiet. So, if you're in the rare coin market, I would take a really hard look at what you own, and I take a really hard look at why you own it. If you just love them, there's some great buys out there. If you love rare coins, you're buying coins cheaper than you did 20 or 25 years ago, so it's a lot of fun. If you're investing, it's a tough market. It's a really tough market. I talked to a client yesterday, and this client had talked to a dealer who told him about a certain area they were promoting. And he checked out the dealer's prices and found out this particular dealer's, he's pretty expensive. He's probably marking things up 50, 60, 70%. So the client decided that he would do better and go on eBay, take the dealer's advice and go on eBay and buy the same coins. And I think he spent $300,000 or $400,000 on eBay, which is a really, really big mistake if you don't know what you're doing. And he bought all the same dates the dealer recommended, and he bought the same quality, or thought he bought the same quality. And what he ended up with is coins that are probably worth less than $50,000. Because what he did, not knowing what he was doing, he was buying coins based on the grade, but he wasn't looking to see who had graded them. So when people are comparing prices, generally they're looking for certified coins by NGC or PCGS. He's buying coins from these off-brand grading services that the dealers don't recognize, like PCI or NCS. There's a whole variety of alphabet names of grading services. So, I guess what I'm saying is, if you are in coins, yeah, everybody wants to get a good deal, but you really have to know what you're doing to go out there and start buying rare coins by yourself. You're not going to beat the dealers. These dealers do this day in, day out. This is our livelihood, and you're just not going to beat the system. It's not going to happen. So, if you're in the coins, buy from somebody you can trust. Check out the prices. Make sure you're getting certified coins. But to go off on eBay or something like that and think you're getting a deal, it almost never happens. I've had portfolios that have been shown to me from eBay years ago where 90% of the coins were counterfeit. So did they get a good buy? Not really. They got a pile of bullion they got to melt down, and they paid collector coin prices for them. So I guess that's the fun show. The Long Beach show is coming up here in another week or two, and I'll be at that show again. The shows are a lot of fun if you're a collector, but a tough place if you're an investor. I know some of my dealer friends, they'll have their clients meet them there, and they walk around the show just to make sure they don't get ripped off when they're buying coins. One other thing I wanted to mention that I thought was really interesting. One of the people that I know and I deal with, he's an importer of gold. He brings a lot of stuff in from Switzerland and other parts of Europe. And they bring in the $20 Liberties and a lot of the $20 St. Gaudens. They also bring in $10 Indians, $5 Indians, but mostly it's the $20 coins. And, he was hoping that with gold being so active right now, that sales would be up. And unfortunately, what's happening is kind of the opposite of that. Even though gold sales are up, the sales of these common coins are actually down quite a bit. So he was telling me that he had a really great year, and then in 1 month gave back all of his profits from the entire year in 1 month because he had to buy the coins. What they do is they buy the coins, they try and pick out the nicer coins, they make their profit on the nicer coins, and then they dump the other coins on the market, and that's what these telemarketers are selling. They're selling all the coins that nobody really wants. And the only way to get that market going is you've just got to keep talking more and more people into buying. And at the same time, we're bringing thousands of coins in from Europe. At the same time, we're trying to talk people into buying these St. Gaudens and $20 Liberties. And again, at the auction, even some of the rare dates that I saw going in November for, I'm not going to go through date by date, but some of the dates I saw that were $6,000 in November were going for $3,000 at the auction here in January. So when we get back, I'm going to talk a little bit more about the gold market and a little bit more about the $20 gold pieces, simply because I see more people who own those.
Once again, here's Nick Grovich.
Nick Grovich, I'm back with you. We're talking a little bit about the gold market and whether this renewed interest in gold lately has any effect on the coin market and a lot of the common coins that a lot of dealers seem to want to sell people when they call for gold. there does seem, like I said, there's a lot of renewed interest in the bullion markets right now, both gold, silver, even platinum. I mentioned earlier, I know our sales are up tremendously from a year ago. And, if you've ever talked to us, if you call, we don't beat you over the head and try and get you to buy something. We give you information. And if it's right for you, great. If it's not, that's fine. So, when our sales jump like that, I know it's coming from demand, not because I have a bunch of slick brokers sitting at my office. But what I've been seeing a lot of lately, and this kind of goes back to what I was talking about before the break, is these importers bringing coins in. There's just so many of these older U.S. coins on the marketplace. And what I'm talking about mostly are the old St. Gaudens $20 gold pieces and the $20 Liberties that it's really hard for those coins to support big collector premiums. I can remember the premiums. Again, that's the amount over the gold that a coin cost. It used to be really, really big on these common coins. An MS63, that's kind of an average, very average quality coin. An MS63 St. Gaudens, you used to be able to trade that coin in and get 2 ounces of gold. Today, you're probably lucky if you could trade one in and walk out with 1 ounce of gold. Now, St. Gaudens is less than an ounce, and people always say, well, why would I trade in a St. Gaudens and get 1 ounce of gold? It's not so much that you're going to walk out of there way ahead gold-wise, but you walk out with something that's number one, it's a lot more liquid when you go to sell it. And it's something that's easier to watch. You're not looking for these collector premiums and having to worry about who's going to buy it when it's time to sell it. At the seminar, I'm going to go into a lot more detail about these coins and show you some graphs and show you how they've done over the past. The dealers just seem to have huge quantity of these coins available, so I don't see anything that's going to make these premiums go up. And I've been saying this for over 20 years now. I've been telling people this, and now it's really starting to hit home. One reason I'm talking about this is we've had more people come in the office asking about these types of coins. I mean, they've already bought them and they're asking how they're doing. I had a client, as a matter of fact, this morning come in, and he had spent $87,000, not with me, but with another dealer in town, and they had sold him 50 coins. They were all $20 gold pieces, very low grade, MS61s, which is nothing spectacular, nothing special. And, I valued those coins out today. They were worth about $53,000. I could probably sell the coins to him for $53,000 to $55,000. So he lost 40% on his money. And he bought the coins back in 2009 when, guess what, gold was $1,100 an ounce. So here you are, basically the same price for gold, and he's lost 40% on those coins. Is it because the dealer took advantage? Maybe a little bit. I mean, the dealer made more money selling those coins, I'm sure, than if he would have bought Krugerrands, which is what the gentleman wanted in the first place. But the other thing is they just lose their premium. And if you think about it, if you look at some of the European coins from the same time frame, you could buy French 20 francs that go back into the 1700s, early 1800s for $3 more than what the gold's worth. You can buy British sovereigns for $10 more than what the gold's worth. So there's a huge, huge variety of European coins that are older and really no more rare than the St. Gaudens and Liberties that are just traded as bullion coins. And it's kind of crazy because those coins, because they trade as bullion coins, are actually more liquid than the U.S. coins that people are selling as collectible coins. So, I've been, like I said, I've been saying this for 20 years that the St. Gaudens, the Liberties, $10 Liberties, these common coins, they're gonna end up someday becoming a bullion coin. And that might be better than what they are today because at least maybe it'll be a little better liquidity. The problem you have with these coins, again, is the only reason they go up is if the dealers can sell more than what's available. And that hasn't happened in 25 years. I mean, it happened way back when PCGS and NGC started grading coins. But you have to remember, when they first started grading coins, there were 0 coins in holders, and that's the certified holders. So in the beginning, everything was very rare, so prices went up very quickly. But, after they've graded a couple million coins, and I'm talking about just the $20 gold pieces, PCGS and NGC have graded over 2 million of those. How rare are they? Why are they worth anything more than the gold? Now you've got people who have bought those coins for 20 years. Some people are selling. Some people are trying to find out what they're worth. those people aren't going to go back and buy more coins. They're not going to buy. This gentleman who came in and spent $87,000 for coins worth $50,000. Do you think he's ever going to buy a St. Gaudens or a 20 Liberty again? I doubt it. And that's where a lot of these people are. He made a comment to me. He said, I bought those coins when gold was $1,100. And I watched gold to go to $1,900, and I never got into a profit situation on them. So why would he come back and buy more coins now? So you have millions of people who bought these so-called numismatic coins because their dealers told them all these great things and how they go up faster than gold, and there's a lot of reasons, supposedly safe from confiscation, et cetera, et cetera. And they missed out the first time gold went up. They never had a chance to make a profit. Now gold's come back down. They're taking another look at it. A lot of people are selling and trading into bullion coins like eagles, maple leafs, that type of thing. And there's nowhere to go with these coins because we can't take them back to Europe and put them back in the vaults. They've got to somehow get absorbed by the domestic market. And when you have millions of people, and maybe millions, maybe that's an exaggeration, I don't know the number, but I would guess it's millions of people who've been sold these coins over the last 20 years, and they've been turned off to them. Where do you go with all these coins when they come back in? Do you melt them? Do you start trading them as bullion? I don't know what happens to all these coins. I don't know how they find homes. So we're going to, like I said, we're going to talk a lot more about that at the seminar. That's February 10th from 1 to 4 p.m. at the Doubletree Resort. Call the office at 480-553-5282 if you'd like to attend. We have limited seating. We try and keep it very small so we can talk to everyone, and we'd be glad to see you there. Now, I'm being told I never gave a trivia question today, so I have a really tough one today, and I suppose you could find anything on Google, but we'll give this a shot. And we'll give away a 10th ounce gold eagle today because I think this is a tough one. This came up in conversation at the fund show because there's so much interest, like I said, in the really early American coins. So in 1815, they changed the half dollar. The design was changed. It was not. I think it's a really beautiful coin, but at the time they didn't really like it that much. In fact, I'm reading from an article here. The design was not highly regarded by critics who wrote that the rendering depicted the artist's fat mistress. I think it looks pretty nice, but it was a real small mintage because that was right after the War of 1812, and it was very hard to buy silver bullion, so the government just didn't have a lot of silver. But something happened, and they didn't make any quarters dated 1816 or 1817. Tell me the reason why, and I'll give you a 10th ounce gold eagle. That's a tough one, right? That's one I didn't know, actually, until I read about it. So, let's see, where am I here? So let's see here. I'm trying to explain why many of the coins, the dealer sales, even at the best times, the prices barely go up on coins. And these dealers that sold a lot of these $20 gold pieces, what some people do is they say, well, the dealer who sold them to me is going to pay me a lot more money for them than what the market is. Because what they'll do is they'll say, well, our buyback is higher. We're paying more than market. Everybody wants to make their clients happy. But the problem you run into, and I see this happening a lot right now, is you go back to these dealers, and unless they have more sales coming in, they can't really just buy coins and inventory them because they've got limited funds, they've got limited market exposure. So a lot of times you start getting in a line for them to start selling your coins back into the market, and they're not really selling them back in the market. They're hoping they can talk some other client into buying your coins. And for a lot of dealers, they don't like doing that because if you're already a client, they want to do their best. Hopefully they want to do their best to make you happy. So maybe they're paying you $1,200 for a coin that they can go elsewhere and buy for $1,100. So they're giving up 10% of their profit, and that's a really tough thing for them to do. They're giving up half of their profit or a third of their profit by trying to treat you better. And so a lot of times, I know one client called, and we gave him prices on his portfolio. He went back to his dealer. They gave him these great prices, but when he said, okay, I'd like a check, I think we came out within $50 of each other. And it was simply because, I don't care how good or bad the dealer is, the market wins out. So, when push comes to shove, they can only pay you what those coins are worth. So if you have St. Gaudens, Liberties, any type of collectible coins, I'd really take a hard look at that. You could call the office. We'll be glad to do a review, show you how they've done, show you how they did when gold was 1,900, show you how they did when gold came back down to 1,100. And then you make the choice. Take a look at it, see how they've done, and decide if that's the right thing for you to be in or not. So, if you're sitting on that type of thing, I would really encourage you to do that right now.
Maybe a phone number so they can call.
Yeah, if you want to call the office, it's 480-553-5282. Again, you can ask them for that, Protect Your Wealth with Precious Metals. It'll give you a lot more information. And you can sign up for the seminar on February 10th from 1 to 4 p.m. at the Doubletree Resort in Scottsdale. We would love to see you there. We're keeping it down to about 30 or 40 people. Is that right? And that's just simply so we can talk to everybody and we don't end up with a huge crowd there that we can't manage.
Once again, here's Nick Grovich.
Nick Grovich, I'm back with you. Got a couple more things I want to touch on because, I try and talk about the things that happen at our office, the questions people are asking me about, the types of coins that come in through the front door and people have questions and need to learn about. So I try and talk about that type of thing. It was pointed out to me that if you know the answer to our trivia question, you should call 602-324-1510. I'm a little rusty after being gone for 2 months. Look, I don't know where the stock market's going. I don't know where the gold market's going, for that matter. Part of what I think my job is not to predict prices or predict what's happening. I mean, I'm a coin dealer. That's not our job. Our job is to try and provide you with the best products for what your needs are. And unfortunately, what I see so often is, coin dealers as a whole are really good people, but there's a lot of guys out there, a lot of these boiler rooms that are out there that prop up just for one reason, to make money. And of course, we're all in business to make money, but it really gripes me when I see, like this gentleman I told you about this morning, somebody who wants to actually buy gold. They want to put some money away. They want to try and protect it. And they tell people that, they tell these brokers that, and these guys just take half their money right up front. We were joking in the office today. One of my guys, Brian, said, these people put it away because they want to protect some money. They want to save it. They want to protect it from the government. And I said, a lot of times they're better off taking their chances with the government. They only take half, or a third or whatever it is. And a lot of dealers do a lot worse than that. So, my point is, I'm not going to tell you where gold's going because I don't know. I mean, I think right now a lot of people are scared, so people are just looking for something as an alternative. When you're making a ton of money in the stock market, why would you go do something else? When people are making a ton of money in gold, why would they do something else? But we're in markets right now that we don't know if the gold market's ready to turn around. We don't know if the stock market's taking a dip or if this is going to be, another one of those big crashes. Nobody knows, and people are afraid. And I just like to see people get what they think they're buying. If you think you're buying gold, then buy gold. You don't walk in and buy a rare coin and walk out and find out you just gave the dealer half of their money in commissions or markups or whatever it is. So that's one of the reasons we write these brochures and one of the reasons we do the seminars. And I think if we give you good information so you can decide what's right for you, it seems to come back to us, It seems to come back to us when it's time. Another thing that's happening right now is with the stock markets, being up and down, and people are getting seasick watching it. A lot of people are looking at their IRA accounts, and I see a lot more people right now again are trying to go into a precious metals IRA. That's something that's been around for a long time. You can put gold, silver, platinum into an IRA. But again, you got to be aware there are loopholes in the law and you can still get stuck. A lot of people think because it's an IRA and you have a trustee and somebody's overlooking it, that it's a lot safer. But I hear ads all the time from coin dealers. Oh, do this with your IRA and call us and we'll tell you what to do. These guys are no more qualified to tell you what to do with your money and what to put into an IRA than you probably are. They're not trained, they're just salesmen. So just be really careful. A lot of times what they'll do is they'll put the proof gold coins or proof silver eagles in there. And for example, a proof silver eagle wholesale on the coins $50 and they're selling them for $79 to $100 a coin. So right off the bat, you're trying to save money and you're giving away half your money or a third of your money at least. And I just don't think that's a good way to do it. So and this is when it happens too. It's when markets are crashing, markets are falling, and people panic and they call and they're very emotional and they talk to a dealer, and the dealer always makes it sound really good. Oh yeah, let's put some money in gold. It's always safe. It never goes down. It always holds its value. And that's not 100% true. But if you stick with the bullion coins like the American Eagles, the Buffaloes, Maple Leafs, there's a huge variety of bullion coins you can put in IRAs. You're going to be a lot safer than putting some esoteric coin in your IRA. And again, when it's time to sell it or it's time to cash out, it's going to be really, really easy to handle. There's another thing with the IRAs that I see advertised, and it's a self-directed IRA. Now, I'm not an accountant, I'm not a lawyer, so you'd have to check this out yourself. But I know there's a lot of people setting up self-directed IRAs. I don't know if they're going to hold up or not. But you have to really be careful what you put in them. I see a lot of people putting coins in them that aren't even approved for IRAs. So the question is, what's going to happen? Looks like I have somebody with the answer to our trivia question. Oh, has a question. Okay. Hi, this is Nick.
Hi. You had some sort of a question. I'm not certain just exactly what it was. Could you repeat it?
Yeah, on the early coins. Here's the trivia question of the day. In 1816 and 1817, the mint stopped making quarters. So this is a tough one. Why did they stop making quarters in 1816 and 1817?
Oh, let's see. I don't think they made any silver in 1816, and then they made $50 in 1817.
Right.
And unless there's some sort of a war going on, that's all I could guess.
You're pretty close. I'm gonna give you the answer. This is really getting picky here, but I wanted to come up with a tough one because so often I get a question, they just look it up on the internet. A fire broke out at the Mint in early 1816.
Oh, okay.
So it's kind of a simple answer, but not one too many people.
Well, how would they make pennies at the same time then?
That's a good question. I don't know.
How would they made pennies?
Well, there was a lot of damage, and I suppose they could do partial production, but not enough to get everything out.
Yeah,
Plus, they had a shortage of silver after the War of 1812. So you're partially right on that, and I'm going to give it to you. So hold on, and Ashley, you'll get your name.
Oh, okay. Thank you.
All righty. Have to give something away today, right? Okay. All right, where was I? So what I was talking about with the IRAs, again, I meet a lot of people who have St. Gaudens, 20 Liberties, collectible coins, and self-directed IRAs. I'm not an expert. I don't know what the IRS would say, but I know in a traditional precious metals IRA, those coins are not allowed in an IRA. And I suspect, I know this sounds like I'm telling you all these things to watch out for, but it's because these are the questions I get, and I see people every day who have these problems. But in a traditional IRA, it has to be gold eagles or gold bullion. You cannot put collectible coins in there. So in a traditional IRA, I think some people talk you into setting these up just so they can sell you the coins they want to sell you. I don't know that it's ever been tested with the IRS. And I know I wouldn't want to be the first guy they come ask, because whenever the IRS asks me something, they never like my answer. The last thing I wanted to just touch base on, every year, the beginning of the year, the new coins all come out, and I'm sure you all see a million ads. 2016, I saw an ad this morning, the 10th anniversary of the gold buffalo coin. Well, it's actually the 11th anniversary because it came out in 2006. If you add, that's really 11 years, not 10 years. But, there's nothing special about the coin. It's the same coin they've been making, 2016. It's a great bullion coin. But what you're going to see ads for is you're going to see ads for graded coins. Now, if you like graded coins, there's absolutely nothing wrong with that. The benefit to getting a coin that's graded MS69 or MS70, it's in a holder. You don't have to worry about counterfeits. You don't have to worry about getting scratched up. And you're probably going to pay $20 or $30 more for that holder. So for that, that's well worth it. But every year I see these ads where they'll sell the coins and say, these are really rare and high grade. Well, when they come from the mint, they're all MS69 and MS70. And all I'm cautioning you about is, for an MS69 or MS70 coin, don't pay more than $1,200, $1,250 for either one. And I've seen ads selling them for as much as $4,900. So just be really careful. If you have questions about any coins, call the office at 480-553-5282, and we'll talk to you again next week.